Hello everybody, this is Books of the Stock Market. How's everyone doing? As for me, everything is going well. My supervisor is on break for the entire week, so that's pretty good. It almost feels like I'm on break as well. Anyways, in this video, we'll be just looking at what has occurred in the crypto space as well as look at other charts. Last week's video talked about a few events that were coming up, so let's see the outcome of those events. Once all of this is done, I'll end the video with a portfolio update, so stick around if you don't want to miss it. The most important event that occurred was Jerome Powell testifying in front of the Congress. Jerome Powell said the current inflation levels are higher than the expected levels the central banks forecasted. This could indicate that the Fed would want to reverse its easy monetary policy. He stated that this is a shock going through the system associated with reopening of the economy, and it has driven inflation well above 2%, and of course we're not comfortable with that. However, Powell did state that it would be an error to overreact to inflation that results from one-time increases in price of certain services like air travel and hotel rates or goods like new and used cars. Powell is now looking for goods that have not increased a lot but are on the verge of increasing. He says that he's unsure which goods are next and is keeping a close eye on all goods so they can make sure that inflation is just transitory. This is all very interesting as US consumer prices continue to accelerate in June at the fastest pace in 13 years. Powell is not particularly concerned with this as this particular inflation is just unique in history. We don't have another example of the last time we reopened a $20 trillion economy with lots of fiscal and monetary support. He then went on saying that the Fed is in no hurry to adjust its policy right now because they would need a better understanding of what exactly is going on. They are looking to see if more Americans return to work, how children returning to school in the fall works, and what happens when enhanced unemployment benefits expire in early September. However, Powell did note the definition of full employment might have changed. Some jobs that were lost might have been lost forever. Earlier this year, the Fed did say they will hold interest rates near zero as long as they were around the 2% inflation rate. Since we are reaching levels of dangerous inflation, it looks like Jerome Powell's stance is that he wants to wait to see if this is just a little blip or it will be a long-lasting problem. However, Jerome Powell also gave his 2 cents on crypto. He said that you wouldn't need stablecoins, you wouldn't need cryptocurrencies if you had a digital US currency. He attacked stablecoins and cryptocurrencies because he does not want the public's money held in an unsafe, unproven asset. Stablecoins are coins such as Tether and USD Coin. These coins are backed by fully reserved assets redeemable on a one-to-one basis of the US dollar. This is different from the digital US dollar sitting in your bank accounts because those dollars are partially backed by reserves since banks only hold a fraction of the bank's deposit liabilities. A digital dollar will be fully regulated under a central authority and fully backed by the country's central bank. As you can see, they are a bit similar but very different at the same time. Personally, for me and most cryptocurrency enthusiasts, a digital dollar is entirely different from any sort of cryptocurrencies as it is centralized. This means that the government has a word in the monetary supply. It can all of a sudden print more digital dollars which would cause inflation and a decrease in buying power. Many people don't want government and money together. They don't want an uncontrollable force to control how much you can buy with a specified amount of money. Also, a digital dollar wouldn't allow the ease of international transactions cryptocurrencies provide. Cryptocurrencies provide efficient alternative payment networks that allow for businesses to happen very quickly without the need of a bank or a middleman. But in the end, we all know why the Fed and any other government will come out and trash crypto, and that is because they don't want to lose their monetary control. Cryptocurrencies provide an alternative source of money, and that money isn't controllable by the government since it is built on a decentralized network. Therefore, we have governments like China outright ban cryptocurrencies. Whatever the case is, we all know Powell's true intentions, and it is not for the quote-unquote safety of the people. As for the news surrounding the GBTC unlock as expected to happen on July 18th, not much has changed in the markets. We're still above this red trend line of support. We're also approaching an important horizontal level, so there's a bit of strength relatively speaking. It looks like not much has changed in terms of Bitcoin's price, but that may be because it is still Sunday and the market still hasn't opened. Other than that, there's not much to say as we know both bears and bulls have very compelling arguments as covered last week. We could see Bitcoin fall due to seller selling since it's the end of the lockup period. But at the same time, for institutional investors to completely close out of Bitcoin, they will need to cover up their shorts which they should have bought to help lessen the risk of Bitcoin. This means they will have to buy Bitcoin to close out the shorts, which in return would raise the price of Bitcoin. Overall, this is just me speculating and we will just need to see what will happen in the following weeks. Now let's look at a chart that is not Bitcoin. Here we have the DXY. We're at an important junction because we're about to break above this trendline that has been in play since May 2019. As you can see, we closed last week at the resistance line. Preferably for us Bitcoin holders or anyone that holds any sort of investment, we would want the DXY to get rejected by the line and fall back down. This is because a weaker dollar is generally good for assets. Anyways, when looking at just price, we see that we did break out of the line but failed to close above the line as represented in this huge red candle. Ever since then, it looks like price has been trying to climb back to the trendline and test it again. To be honest, price should be rejected by this trendline because we did see a huge infrastructure plan get finalized. Also, we just went over that Jerome Powell will not be raising any rates anytime soon. Therefore, if the price is to act rationally, we should see the dollar fall. If the dollar falls, this would probably help Bitcoin maintain staying above the trendline and the important horizontal level it is currently testing. Finally, let's do a portfolio update before I end the video. We see that Bitcoin is trading at the $31,500 range. Bitcoin did not have a very good week due to all the FUD from Powell and the GBTC unlocking. We're still above the $30,000 level, which is an important level of support as multiple horizontal levels such as the 1.618 Fibonacci level and the lower bound of the Wyckoff accumulation phase is located here. For Bitcoin to continue being bullish and not break the 4-year cycle, we need to see Bitcoin stay above the $30,000 level. Other than that, my Ethereum position also took a major hit. We see that we're back below the $2,000 range and seem to be struggling to hold the $1,900 level. I remember that I was up a lot on this trade, but now I'm only up 200%. There's really not much to say as Bitcoin is coming under a lot of pressure, so we just need to wait to see how price develops. We see that I'm down 24% off this trade and seem to also be struggling. Like Ethereum, this is probably due to Bitcoin just having a hard week. If Bitcoin stays above the $30,000 level, we just need to wait for the consolidation phase to end. With that, I'm going to end this video. If you like this video, press the like button. If you have any questions about this video, leave a comment below. If you want to watch more videos like this, press the subscribe button. This is Books of the Stock Market, and I'll see you around next week. Thanks.